For the same, I would like to take this opportunity to introduce our next discussion that is scheduled for this afternoon. We have a panel discussion on the topic the CFO's influence on corporate strategy, balancing finance and growth. I would like to take this opportunity to introduce our moderator, Mr. Kedar Choudhury, co-founder and CFO, 2050 Healthcare. Mr. Kedar is a seasoned strategic finance professional with over 20 years of experience across the service, manufacturing and finance sectors. A qualified chartered accountant and cost and management accountant with an academic background in physics. He brings a unique analytical and interdisciplinary approach to financial leadership. I would also like to take this opportunity to introduce our panelists, Mr. Naval Bajaj, CFO, Yokogawa India Limited, Mr. Subhasis Gupta, CFO, Hitachi Energy, Mr. Kaliyuga Swami, CFO, Homelane, Mr. Rajganesh R, CFO, Adecco, Mr. Tarun Khandelwal, Associate Director, Account Management, Clear. So let's all put our hands together and welcome our moderator and panelists with a big round of applause.
The lunch. Okay, so what we'll do is we have a very interesting topic on corporate strategy. Finance guys, CFO always need to do a balancing act. Before that, I'll request the panel member spend 2 minutes or 1 minute each, talk about their role, what industry. Then we'll try and correlate their experience to the subject. Raj, please.
Thank you, and very good afternoon. I'm Raj. I represent Adecco. I'm the head of finance for Adecco, and Adecco is a Swiss-based HR consulting and solutions company. I am a chartered accountant, graduate in mathematics, and a certified internal auditor. I have over 23 years of experience in different areas in finance. I spent most of my life in manufacturing and automotive, with brief stints in IT, ITES, and consulting. So that's about myself, and over to you.
Thank you. I am Naval Bajaj. I am CFO for Yokogawa India Limited. I oversee South Asia, and our business is, if the people don't know, the business is industrial automation. That means we have various engineering products and services to automate the manufacturing operations in oil and gas refineries and petrochemical industries, chemical industries, fertilizers, pharmaceutical companies, and wherever we have process industry. And in India, we have domestic selling, we have projects and product selling both for the public abroad in the South Asia region, as well as we have engineering center and IT-enabled services operations. And that's my brief. Thank you.
Thanks, Naval. Subhasis.
Hi, I'm Subhasis Gupta. I'm CFO of Hitachi Energy Technology Services Private Limited. I know Hitachi Energy, Hitachi didn't have these Hitachi Energy things actually. So they took over from ABB way back in 2020, the power grid division. So we are into the T&D segment, CapEx mostly, and we are doing all this technology innovation, so to make sure that transmission is efficient, and we have very less loss in the transition. And also we are into the automation side of plant automation, because now we have many sources of electricity, So how we balance the generation plants, how we make sure that we are having a super fast highway to bring the electricity to the consumers. So I'm 32 years in the profession as a chartered accountant. Thank you.
Thank you.
Hi, good afternoon. Thanks for having me here. My name is Ishwar. My full name is Kaliyuga Easwarasamy, but everyone knows me as an Ishwar. I am CFO of our Homelane and Design Cafe. We are in a home improvement company. We do a end-to-end home, designing, manufacturing, and installation services for your fixed furniture segment. We operate around 85 showrooms across India, around 40 cities as of now. Thank you.
Good afternoon. Am I audible?
Yes, Tarun.
Good afternoon, everyone. My name is Tarun Khandelwal. So I lead the business at Clear. I believe everybody is aware about Clear. We help enterprises managing their compliance digitally. So I'm leading this, this particular division from quite a long time. I have experience in different domains from a SaaS through AI. And yeah, this is why I'm here. And thank you for being here as a panelist.
Thank you. Okay, so overall, today's world, let's say finance head, CFOs, financial oversight is the basic need. Anyway, we have to do that job. Beyond that, we need to involve into business strategy, so and so thing. Keeping that in mind, I'll start with the Naval. So how CFO participate in the long-term strategy or over and above the financial oversight, or take an example, we say CFO is the co-strategist with CEO. That's the way it's being positioned. What's your view and thoughts on that? Correlating to your work, practical experience is always better.
Yeah. I think that's a very interesting question, Kedarji. First thought that comes to my mind is, what is long term? Sitting in Bangalore, we have brick and mortar companies like me. We have startups sitting next to us, and we have different businesses. I mean, IT-enabled services and others. So, in a traditional sense, we used to say anything more than 5 years was long term. But then we have companies which are living by each day or living by the edge, I should say. So let me just keep it at that level for everyone to just consume what I am able to share, because I will share my thoughts based on my own experience. I think in terms of this corporate strategy, once we know that what is the vision and what is the commitment of the company and what is our market segment, it is more about CFOs engaging directly with the business leaders, and mostly in an unstructured way, mostly one-to-one interactions of what's up. And it opens up a lot of stuff which gives us an insight on where we can contribute. And essentially, if any corporate strategy has to be made, it has a financial implication to it. So CFOs and the finance functions will automatically get involved. But the thing is that what is the value add that I bring on the table? So if my managing director comes to me and asks me that whether I am going to, whether it will be feasible for us to buy this particular entity because we don't have this product line, I should be able to churn up the numbers and bring out an insight of what is available in the market, how much profitable it will be, what kind of tax issues it could create, blah, blah, blah. And that is the insight I will bring on the table, and that is where you automatically become part of the story. However, if we say that this is something that the business units will know better and we need to discuss and all those things, then the battle is lost. So to answer your question, I feel that more and more engagement with the business side, especially the informal discussions, as and when we can find time, and then finding out those cues, making your team more and more aware about what kind of data points we should keep ready. That's what I always do. Is the answer.
Thanks, Naval. Other thing also, let's say, since CFO has access to all the information, CFO can work as a value creation, he can help out M&A strategy, or how to bring resilience into the business itself. Or those are the things, or let's say equity narrative. A company had to be a private company or a listed company. Both the cases, equity narrative is important. That's the way all we can add value as a co-strategist with the CEO. Okay. Next, I'll come to Ishwar. In every business, growth is important. Okay. With that, we need to have a financial prudence. Okay. How to balance? What are the key points you can bring it to the table for discussion, for as a collaborative discussion, instead of putting no or yes or giving a decision? What's your thoughts on that?
Oh, thanks. I don't think this is a question, but it's actually CFO's dilemma, right? I don't know how many of you agree with you. How do you say yes to some investment proposals coming from business, right? It's quite challenging, everyone. But the important thing what we should look at it, and what I do on a day in and day out, is that to, make sure your basics are right, right? The basic hygiene of financial discipline has to be absolutely right, right? If you keep that and embed that, value into the organization, then your life will be a little more easier on taking the decisions. What are the basics? Simple and first and foremost is any investment you do or anything you do, whether the ROCEs make sense, right? Each industry's ROCE will have a different range, ranging, as low as 10-12% to as high as, 30-40%, right? So you need to know what is your industry's typical expected ROCE should be. And that's the one parameter for you to evaluate, any investments. The second one is, generally, we have heard a lot and we have read a lot of news articles, grow at any cost, right? And I don't blame anyone, but, earlier investors also, supporting that argument. Now that narrative completely changed. They are not expecting you to grow at any cost. You have to grow sustainably. So how do you do that? Then how do you allocate capital? So any business if you take, you will have 3 stages of business. One is your core, which is your bread and butter. You should not starve the capital allocation for that bit. Ensure that your core business is protected. Second bit comes on the growth side. Core alone will not take you to the next level. You need to grow the business. Then what is the best percentage of the capital should be allocated for the growth, right? The third one, it comes innovation. I call it as a moonshot, right? Take a famous example of Elon Musk's companies, right? He wants to fly the rocket, heaviest rocket in the world, to Mars, not even to the moon. He is trying for a Mars shot. I am just talking about the moon shot. So you should also need to allocate some capital for the moonshot also, because you never know which idea might be your biggest opportunity in the future. So capital allocation is very, very important. As a CFO, what you need to do, one, these are all the beginning of the investment cycle, right? But you decided to do an investment or a growth opportunity. Measuring the KPIs is very important. Define the KPIs upfront before even approving any investment. Define, okay, this is the money I'm going to put. What are the KPIs for this particular investment? How do we track that? So tracking is very, very important. What you measure is what will get delivered. If you miss something to measure, it will never get delivered. That's my experience. Thank you.
Yeah, thanks. CFO need to come with, inject analytical rigor. Data basis analysis, you have to do it. Second thing is, every business, every growth analysis you do, there's a risk. How do you bring a risk-adjusted lens to the CEO? That's the takeaway from this. Okay.
Thank you.
Okay, next I'll come to Subhasis. Other than the finance, CFO also involved non-finance areas like ESG, the talk of the town, or you're talking digital strategy, you're talking about. Then for the growth point of view, customer experience is so important. Let's talk about maybe one by one, others also can contribute to that.
Thanks, Kedar. I mean, very interesting and very relevant question in today's world. Having said that, frankly, till now, from the ESG point of view, we are in a very nascent stage for the, as I see from my company's perspective, that how we are measuring that and measuring in the sense when it is coming to operational, this is measured properly. That is there. But when it comes to the decision, the investment decision, be it in CapEx and R&D, I mean, how we measure properly that what exactly we are expecting out of that. As a product portfolio, the Hitachi Energy, we are into this. We live on, sustainability, because our products are helping our customers to be more sustainable in their operation. Be it reducing the carbon emission, delivering efficient transmission of power. The moment you are having efficiency in power transmission means you are saving the generation part. And the balancing of plant, because generation plants are now diverse. They have a diverse source. It is coming from solar, and peaks are also there, peaks and downs. So how we measure our ESG because that is a given the fact that it will be there for our customers. First and foremost things we are doing in the R&D field. We are trying to bring more and more product. Even in our current product, we are always analyzing that what are the things which are hazardous to the society. I mean, one good example is SF6. SF6 is, very, effect is huge if there is a leakage of SF6. Most of the high voltage products earlier used to have a SF6 gas field. It is the most efficient, neutralizer, so to say, for the gas filling. And we have come out with an Econics solution, which has just 1% of that SF6 emission. SF6 means, 23,000 MT of carbon emission. If one SF6, say, transformer has a leakage from there. And that we brought down by 99%. So bringing this Econics means you had to invest in the R&D. And that R&D investment not necessarily come with typical ROI composition, but mostly we talk about time to market and the more on the progressive, funding of the project. So there comes the finance, that how we are closely working with our, the R&D guys and the Adecco and all these things, that what are they bringing out from the money point of view. So R&D is one of the investment where we are contributing from the finance side, CFOs with the analytics, with the past records, past experience, how much is the success rate, where we reached and how our competitors are doing, whether they are faster than us to the market or how we are analyzing that what is the next. So here also we are bringing the finance part from that. The other important part is investment, any investment decision, because we already have a target for 2030 for our own processes, our own houses, basically, our office buildings, our factories. By 2030, we have various parameters we have set. Towards that, when there is an investment coming in, a new investment, we have built in our investment proposal, because we follow a sort of a process, automated process. So there, necessarily it has to be brought in that what will be the impact on the emissions, what reduction we are bringing it with this particular investment, even if it is already a given product is ours, and also we are taking in the value chain. The whole value chain is to be taken, that where from we will be sourcing, and if that sourcing sometime becomes more costlier, we need to look at that actually. As a finance, we just can't go only for the number, but we need to see that what value they will be creating and how it will be, connecting with our target. So that is where actually ESG.
Is there a way to measure ROI for the social impact or clean energy? Is there any standard available? What's your thought? Or internally stakeholder value creation point of view, anything we are doing it?
That is the most important, Kedar. You are right actually. You are still not there actually, how this ROI will be calculated for in particular things, because it is all based on the particular investment. It is not a single solution to all. But of course, we have a measure, the certain standard is given for this type of market, and also that depends on the geographies also. It will be not the standard geographies for all geographies, because there are expectation is higher in the European countries than here. But our aim is to get those investment in a way that we do not see that, we are over-committing our investment. At the same time, we are mindful that what are the extra additional things we are bringing out actually from this investment. That is from the ESG part of view. So digital part, of course, we are in the forerunner. So we are all the projects what we are taking care of, finance is integral part of that, to see that what will be the productivity improvement we will be doing, because we are already in a platform globally in the one ERP system. So now we are looking at our partnering with the various product which are available in the market, and also we are asking our ERP solution giver that what automation we need and how they will be giving that. There also the investment is very specific here. Also we look at what will be the saving in our effort, what will be the additional value creation will be giving. So those are the things which look at the digital transformation. I think these are the two main
customer
things.
experience point of view, maybe
Okay.
others also can add, take an example. All of us want to do something good for the customer experience is good. From the finance angle point of view, if there are metrics available, take an example, customer lifetime value divided by CAC, customer acquisition cost, what the ratio should be. Should it be 4:1, 3:1? Is there any thing, customer experience?
Similar actually. We mark like that actually in the customer experience, but at the same time what we do is, because whenever there is sort of how, those are all still there, CCRP and all those age-old things actually, how we are, also we are going out with the NPS, getting that, the customers' feedback system and all those stuff. That is already there actually.
You also follow NPS, Net Promoter Score?
NPS, Net Promoter Score also we are following.
Okay.
And we are also seeing that, how the customer is addressed actually, how far. But another part where we see from the finance that we are contributing is, say, on the liquidated damage part actually, delay in execution of the project. And there we are bringing those into the, our business units, because where we see that is a perennial problem of sometime quality and sometime the delay in execution of the project. So at the total project life cycle management, of course, as a project controlling, they are also doing like that.
Thank you. Quickly, I'll come to next question, Subhasis, you only. We talk about collaboration with CEO,
Yes.
or let's say business organization. Same time also finance team also need to be a gatekeeper versus growth, balance, work side, that.
So that part, Kedar, is, I should say it is already in our DNA. Most of the MNCs work like that. It is not new for us. We are all having this profit center, responsibility concept, like a business unit, whatever name, product group you do. And we have the controllership concept. So we always talk controller as C or the business unit manager, CEO, CFO, they are all co-pilots, so to say. And when you have this, it has to be built as a culture actually. And when it can be really imbibed into the system, when they are getting the real valued, input from the finance. And they are only like I could say that, these are the sort of the things like a finance that we can see from the outside, ring fence look actually. And we can also bring certain not very palatable discussion on the table. And that is something, of course, it is easier for us, the companies like us, but not for many others maybe. But I think we need to build that. We always say that bad news should come fast rather than any good news. And to make it a very, not like a goody part actually. We should be sometimes bad guys, finance, and that is for the organization actually, right? And with the fact and figures, that is most important. So that is a sort of a culture which should be built, and it takes time. But at the same time, we need to bring value to the business when we should not be just like a showstopper, but at the same time, we bring certain avenues actually where a CEO can have certain options, not like this, but you can go like this, but not a stopper, but enabler, but at the same time looking at the numbers, and the numbers should speak by itself. And for that, what I really see that this robust ERP system is helping, and also the analytics is helping, and we will be talking about some digitalization is also helping. In many cases, we have a very objective-oriented analysis rather than the subjective. And we are making it a very standard one, actually. It should not happen that one particular BU manager wants to see certain things in his own way. It is not like that. They have to adapt the standard way of looking at the things, actually, which is something which we are building up already. We have built up certain things, and we are in the process of building up many, because we have many diverse business, so to say. But product-specific requirement is also there. But this is what actually I see, a very collaborative approach, but at the same time, speaking the right thing at the right time, because timing is important. You all know actually, you're all experienced for the finance, because timing is very important. Moment you are not flagging this thing early enough, then it will become your own problem. It will not become, it will be not the business manager who will be scot-free, because then the question will come, why you didn't flag out early enough so that we could have corrected the course. So that discussion we should not allow any point in time. So sometimes we need to be very bad on that.
Thanks. Maybe I have a couple of points on this. Let's say, finance guy not only CFO, then our team works with the business organization, not necessarily the CEO. How to change the mindset? Maybe a few years back, finance guys will not take risk. Usually, no. How to change the mindset from no to how? Okay. Or let's say CEO has ambition, founder has ambition. How will work as a translator of ambition to execution? That's important. Possibly Raj or Naval, you want to add something to your experience? Very important thing.
I always tell people that you take decisions. The first question you ask is, what would you do if it was your own business? What would you do if you were the owner of the business? Because then you put the stakeholders' interest foremost, and that usually drives the right business, right? And the decisions as well. And we should remember that we are business partners, and we don't call ourselves back office or support functions. We call them enabling functions, right? So we have to be business enablers. And so long as we take decisions with the ultimate aim of running a business which is growing wealth ethically the right way, and take decisions with that ultimate goal in mind, I think it always falls in place. And the CFO also should be mature enough, because if the CEO had to have other priorities or whatever, you should be able to actually get in and run the business yourself. And that's when you really call yourself a mature CFO.
Yeah, starting from there, CFOs are mature, they have the overall business knowledge, they have overall picture. Naval, how do you train a finance guy? Let's say we have the business finance head or financial analyst. They work with business unit organization day in, day out. What type of training you can give it to them? How do you educate them? How to bring them to business? Any thoughts on that?
Yeah, I'll answer that. But before that, I'll just tie in what Subhasis and Raj have already told. So, as Raj told that we are enabling function. So in other terms, we should not be a disabling function. But in many ways, we are a disabling function. We reject. And that's why people hate us, but that's part of our duty. Having said that, it's very important to keep remembering and telling ourselves that at the end of the day, we are also guardians of the overall corporate governance. And therefore, if anything goes wrong, no one is going to tell us that you are more collaborative with business. So how to bring a balance? I think that is where you're coming from. Firstly, my own experience is that we need to have a clear-cut segregation within finance. The people who are responsible for hardcore accounting and, really the compliance side of it, and the people who are more on the business side and, pro-business. That is where, you can define a little bit of, and create some friction between them. Healthy friction, which should bring in some kind of check and balance, but at the same time, you are able to enable that healthy discussion going around. The second is, as Subhasis was mentioning about profit center. So what happens about profit center is that once a profit center concept is implemented thoroughly and properly, the relevant profit center head thinks that it is his company. And rightfully so. But then he or she thinks only about that profit center, doesn't have the overarching view. So that is where the CFO office comes into picture. For example, a particular profit center may be doing very good, and they want to expand, they want to bring a customer experience center, they want to spend money, capex, blah, blah, blah. The other one is not doing. As a CFO, we have to see how to balance. One guy is saying, I'm doing very good this year. I want to give so many, long service award, this award, that award to my employees. How do you balance? So, because once you give it to one section of the employees, you have to give to other section of the employees. So these are some small challenges that everyone keeps facing. And that is where the CFO office has to get inside and look at the company as a whole as our own. We are responsible for the entire company, not for one profit center. And we have to make people sit across to each other, discuss, and I have personal experience. I'm telling you, once we talk very openly and transparently, people do understand, and things do get better. Now, coming to specifically on the training side, especially the people on the business controlling side and the credit control side who are more business oriented in my company, I always encourage them to participate in such, seminars, conferences. I always encourage them to be part of the operational reviews more and more, and have, as I told in the first question also, more and more informal discussions. I think informal discussions are always much more fruitful in my personal experience than a formal meeting which is in your calendar. So.
Thank you, Naval. I'll come to Raj. Let's talk about some real life example or let's say finance-led initiatives, how it has helped company to take right strategic decision or change in decision, so on and so forth. Any thoughts from your experience?
Okay, I'll try to give some examples. I mean, it's a very interesting thing, right? And we go through this every day. When we talk about strategic impact and decisions, it need not be an out-of-the-box, very drastic idea. Some of the work that we do day to day also can have profound impact if we looked at things more carefully in granular manner. Also looking at things with an enterprise mindset. I'll give you a couple of examples. We were running projects in one of my roles, and we consolidated all CapEx spend into one place, project spending. We realized every project was given a budget, and most of them were containing it within budget. But then when we added up all the savings that we were happy that every project is run within the money allotted. What we realized was every project was budgeted $2 billion more overall, because there were like 50, 60 projects running on. Soon we realized that we should immediately intervene to tighten up the process, looking at the historical spends and patterns. So we started measuring the product spending through the life cycle to see how much you must have spent by this stage, and if it is not, we started evaluating to release funds early. You won't believe we were able to introduce 2 new products. We were able to introduce, in cycle, like cycle refresh to improve pricing. That had significant impact in terms of the outcome, right? Same way, we had announced an investment in a particular place, and between 2010 and 2013, the currency depreciated 33%. So we said, okay, we'll launch about 7 to 8 products, but then 70% had import content, and all of it was suddenly out of whack, and the company had announced a new investment. So then your finance hat comes into play, because we'll have to really then analyze information to see where is it hurting and where can we say what is okay to continue per the old plan and where do we need a change. What are the components that you have to localize and what you can continue to import? What are the strategies you can take? Which products to continue, which ones to cut? So those are the few things that I would clearly call out on how we can influence. Again, bringing in that granularity and data and information and putting it across in a meaningful way to give the business the necessary levers. These are the 8 levers you can operate on to change the outcome, right? And how much we use each lever, the direction changes, then we kind of agree on what would be the right level of operation. So I will stop there.
Thanks, Raj. Maybe I'll give one real example. In my previous role, when I was in Odisha running a FMCG company, we said, okay, we'll go beyond Odisha to adjacent state, let's say Chhattisgarh. So we'll produce long sell product here, go and sell over there. It's a good to grow pan-India basis, go beyond your hub. Okay, that's the intent from business point of view. But over a period of time, let's look at the data for 15, 16, 18 months time, your customer acquisition cost is high. You believe you are not able to go further. With limited capital, should you focus in Odisha market or go to next Jharkhand market? Then when we have done the analysis ourselves, put it to business guys itself, they said, okay, let's stop it, put that money in Odisha, grow the local markets itself. That's the way financial insight can help to change overall strategic decisions also. Okay, I'll come to next Tarun. Okay, so now we see a lot of uncertainty in the market. In that context, let's say CFO, how it can influence key decision-making process itself.
Sure. I mean, quite a relevant question in terms of the way uncertainties are happening nowadays. So times of uncertainties like evolving regulations, policy changes, economic downtimes. We've seen a lot of times where CFO makes it difficult to navigate to the business and also making sure that their business growth engine is running smoothly, right? So most of the times, enterprises move towards cost-cutting activities. They move towards holding on innovation projects or holding on a lot of investments that they are doing. Uh, Now, let's take an example of compliance ecosystem, right? Today, we have seen government is coming up with new regulations. They're coming up with different changes, which obviously it's very difficult for any enterprise or any CFO to equip with, right? Now, in certain areas, this also creates a lot of need for a CFO to choose to a system or a platform which can adapt, which can see how they can navigate those changes at the first place. Now, in Clear, we also collaborate with a lot of enterprises in making sure and helping them in their compliance automation, making sure that their CFOs get real-time dashboards. They should not depend on any manual activity. They should not be dependent on many manual reports to take any sort of decisions. So those kind of systems in place where most of the CFOs now have to focus on with the way the new changes are happening in the market, and also to give them a real perspective of how to take better decisions. There are a lot of predictive analytics are coming into the picture. CFOs are also collaborating with a lot of different teams, where to understand where to invest, what are the buying patterns, to understand any particular trend that are happening in the market. So those things, those tools helps today in taking those important decisions.
One of the parameters is, let's say, wherever there's uncertainty, CFOs let's not spend on innovation, cut down the innovation, or we'll say, no, not now. Okay, instead of that, how do you say, okay, how to evaluate this in risk-adjusted basis? Okay, this are thing I'm doing it, this are risk, how do I do it? That's the way we need to look at it. Okay. We have 3-4 minutes, we'll keep 2 minutes for question and answer. Last question across all, what are the key financial metrics CFO we need to look at on daily basis? One could be, let's say, our regular financial metrics, revenue, EBITDA margin, other things. There could be non-financial metrics. There could be customer-led metrics. Maybe all of you can contribute. Yeah.
Sure. Thanks. I think, over a period of time, the financial metrics has significantly changed. So only if you are looking at your EBITDA margin or a gross margin, it's also important, but, there are a lot of other lead metrics you should look at it. So, somebody pointed out saying that the CFO role is no more, it's only bookkeeping role. You are handling a, half of CEO's responsibility in the organization. So first and foremost, we need to identify what are the lead metrics for our business. So each business will have a different lead metrics. Say for an example, if it is a consumer product business, the lead metrics is not your gross margin, but the lead metrics is saying that how much your money you are spending on your marketing for you to, gain the market share. So what is my market share today? How much I spend for gaining the market share? What's my competitors' market share? Like that, and a lot of people might be from a startup company, right? The biggest challenge for any startup is that your customer acquisition cost. That one single line item will make or break your business. So that we should closely monitor pretty much in day in and out. So I do a weekly review of what's our CAC, in our business. Of course, then, understanding a little more about the business itself for a CFO is important, because it's no point in going and telling the, business leader, go and improve your gross margin, but you should also give some input. How do you improve the gross margin? That's important. Somebody talked about NPS. The most important metrics, not for a business team, it's also for the business team. If your NPS is going down, that's your lead indicator. What is the financial challenge you are going to face in the future, right? Traditionally, we never heard about what is the CSAT score, what is the NPS. But today, it is important. It will tell you, is your business is going in the right direction or not. It's very important for a CFO to do it. I'll leave to others to, talk about it.
And another important thing I would like to add there is, one is measuring the metric, but also making sure the metrics is representative of what is reality on the ground. Because sometimes there is tendency to sugarcoat things, soften up things. It's difficult to call out bad news. But I think it's very important for us to encourage our leaders to share bad news first before we share good news and celebrations, because you don't have to worry about what is working well. We have to really work on things that have to be fixed. And I think that's very, very important culturally in any organization to be successful, to call out what is going wrong and fix them. And that has to be embedded into our metric review process.
Yeah. Maybe while answering, maybe let's say when do the ratio analysis, we compare with historical number, or you can do a benchmark also. If there's a deviation compared to industry or peers, how do you address that? How do you do drill down? What all you do? Maybe any thoughts on that?
Yeah, so very nicely worded question, how to drill down. I think as people say, God and devil both lie in the details, but till what level of details we go, that is always a challenge. So what I do is I discuss with business and I try to find out what is the information that they are not able to get, which they want to get. And then slowly and steadily we keep on building those reports. They may not become the KPIs, but they become the reports, and after a couple of years they will become the KPIs. That is what we have been doing. Then second is, because business is always focused upon, the business side of the P&L side of the business, and from finance point of view, we are also focused upon what is going wrong, how many liquidated damages happened, how many AR write-offs happened, how many, collections are not happening, and all those bad sides that we built. And then we try to see it from a different dimensions, like we see it from a business unit dimension, from a product dimension, from customer dimension, how many customers came back. Then not only at a legal entity level or a department level, but also regional dimension. So for example, one of the biggest challenge I have right now, and I'm still working on that, is to build a regional P&L, which is not available. So, and it's such a simple thing, but it's not available. So there is no right or wrong to it. I think we need to keep working on it and continuously improving.
Yeah, one quick thing also while addressing, let's say, it's very tempting to say we are using predictive analysis when you talk to business guy, CEO. How really finance guy can use machine learning or AI or for predictive analysis? Really, people are using it, we are using it, or just a wish list?
Frankly, it is still not there. For sure. I mean, we need to do a lot on that actually. These certain decisions take time, and it is one of such. But of course, there is a maturity level is different. Certain companies are very much matured, and certain are not. And based on that maturity level, we need to adapt for sure. I mean, we just can't go like that. Without understanding whether we need that level of sophistication, because that is also a dilemma nowadays. Whether you need a Mercedes to run where you can have a bicycle is fine to do. That selection and that is happening, I should say. I mean, it is not that it is not happening. In our company, we have a global level, this automation AI function led by industry expert for that AI, and we have put regional level again. Moment you have a global level, you have a regional organization at the legal entity level. There are certain targets given. But yes, it goes to certain iteration and also the discussion, the deliberation and the Adecco, that what we do, very aggressively and what we do slowly. And one thing is clear for this part actually, Kedar, just Naval also said that, many things we can't do on our own. I mean, we need to build an ecosystem, and that is very given. That many players are there who will be doing only that. We need to leverage that. And also, our basic service provider, because most of our in this organization are having a robust ERP system. We have some HR system, we have payroll system. So many things should come from them, rather than we build up our own automation structure. Having said that, like what Naval and also mentioning, and you also mentioned, Kedar, I mean, depending on the business, depending on the where we are, in which market we are now operating. I can just give one or two examples, like why we have shifted. Typically from operational level things, we are now shifting from the KPI point of view. I mean, traditional KPI like ROC, it was never, that widely used earlier for our regular review. But we are coming to that level because you are investing a lot, because the market is in our favor. We are also talking about free cash flow rather than only OCF. Because CapEx is huge happening, at least in my energy sector, what I can see. So, economic value added and all those stuff actually. And make sure that, what you have also mentioned, that how these NPAs, even our people, satisfaction, what we are taking, because we are GCC concept we are doing, because ultimately productivity driver is people. I mean, machine will give the productivity. If people are not into that, not motivated, then you will not get to that productivity level. So these are some non-finance things are getting momentum, I should say, nowadays.
Firstly, Iswar, while answering, even FS risk also, today is not predictable. Rupee is volatile. Finance guys, we do a simple hedge, do not take any risk. Anything you want to add while answering?
Sorry? Go ahead.
Yeah.
No, I just want to add what the point on the AI. So, that's each different company, and it's very, very relevant for a finance team, I'll tell you why. Different organization will look at the AI in a different lenses. The large organizations, while they do a fantastic job, but it takes longer time. You can't do it. But smaller organizations, particularly in this startup world, they will take it and try it and fail fast. In Homelane, I think we are running around 6 different AI initiatives, including a couple of in finance. I am just doing one simple thing. We work with large ERP system like SAP. Today I have like 10-12 people who does only accounting for invoices, the Miro process, right? To be frank, we don't need a human at all in that process. I'm automating it, right? Not only just accounting, but also communicating with the vendors, getting the answer, processing that answer, correcting the invoice or correcting the PO or raising the debit note, credit note, whatever it is, it's automating. Right? So AI, we don't need to think like it's a big elephant in the room. Take a smaller part and address that part. You will see that benefit then roll out to the larger part. Like one example is that ours is a design company, right? We have 900 designers across India. They are operating in our software. Not necessarily everyone knows every options, every module available in the software to design a beautiful home, right? We build a native language AI using a large LLM model. They can simply type a layman question. They will get to know exactly where is that module, how to incorporate into your design philosophy. So we didn't spend, that whole AI built by 2 engineers using another AI took hardly 30 days to deliver. So it's not necessarily you have to go and put a significant money into it also. So identify the areas where it will give you a quick success, start from there.
Sure. Next, maybe last question, maybe concluding remark. So what are the advice to the young finance leader to develop a strategic mindset? Let's say whenever something comes from evaluation, we say, no, it's not viable. Instead of saying that, can it be said, okay, will this take business forward? That's the thinking. Should it be inculcated? What's your concluding remark? With this, we'll end up.
So whenever such proposals come, right, obviously there has been a lot of talks in terms of the ROI part of it. People do try to understand that, is it going to make sense for my long-term business? Again, here also a lot of AI, which is still evolving in the finance ecosystem, plays a very important role in identifying the patterns of how this is going to take place in my organization, how are my customers' buying patterns are, whether I have to make those cohorts where I can make those investments. So though it is still evolving and people obviously use these things in different domains and different ways, but yeah, these things matters a lot at times whenever there's a decision to make from the company standpoint.
Iswar, you want to add something, concluding remark?
Oh, so I think this is the, every CFO, undergoes like, people like Clear, they will come and, pitch a great product, but we need to look at whether, I think we have to look at from ROI perspective, we have to look at both. What is your short-term ROI and what is your long-term ROI, right? Some of the products will give a quick short-term ROI, but in the long term, it will be a, white elephant for you. So never fall for it for a short-term ROI. Some of the project initial return may not be that great, but, but in a long term, it effectively adds a lot of value for your business and also for your, particularly for finance functions. And if you talk about, AI tools, we talked about, right? There are multiple AI tools so that it's flooded, right? It's daunting for any finance leader to, identify what would be the right tool in the overall clutter itself takes a lot of time, right? You will end up spending, at least I get 50 to 60 emails per week. can I have a 30 minutes time for me to, explain my AI tool, right? How do you identify the good product out of clutter? That's important. Thank you.
Yeah, I mean, just very quickly.
Mindset point of view.
Yes.
Yeah, how to create leaders.
I mean, that is where actually, in this AI age, we just can't ignore this. So what we started doing is like, every month we have some week, selecting the people who should be going through this, the training sort of things, what is market available, how they will be using that thing, so that they also understand that what is happening around us. And strategically, they build up that thing actually into this. So we have our service excellence team, they put like what we call decathlon or something like that, digital week. And so one yearly mega event. And most importantly, we need to be adapted to this thing and understand that there are certain things which we should also know. Because otherwise, we will be not able to maneuver, this situation. Because strategy is always talking around AI, machine learning, what are the things. In many cases, we also know that RPA is sufficient. You don't need to go to that level. I mean, this part is something if we go through that process, we also learn these things, as leaders, then only we can make sure that our team is not, diverted to some buzzwords.
Yeah, Naval, always data or some strategy thinking, kind of some gut feeling like CEO, entrepreneur, finance guys, so need to take some risk.
Yeah, I feel that data comes second. First comes the thought, because without the thought, data is useless. So I believe in telling the team time and again, and to myself, that small things make bigger impact, number one. Number two, keep structuring the things and delegating the things further, and you yourself get involved in unstructured things. And the third and the most important is try to keep yourself updated, because the environment is changing very, very fast. That's it.
Raj, a couple of seconds quickly.
I think it's also about allowing the team to explore and experiment a bit. Very often we are in such a big rush, we try to make decisions very quickly. So it's very important to not help the team all the time. So then they learn their way. We are there to coach and guide, right, as we mature, and that's very, very effective. And also give them experience. It's not about giving a job, it's about giving a career. Rotate your teams. I don't think a finance person should sit in a desk for more than 2 to 3 years. They should rotate, they should experience the company end to end. They should have accounting roles, business-facing roles, tax roles. Then you become a comprehensive, rounded finance professional. So when there are decisions, you're able to think through end to end. That is extremely, extremely critical. And I have personally experienced it. That's how I built my career. And I know many people who work on MNCs go through that experience. We don't want specialists. We need generalists who can really, really think deep and wide.
Yeah, thanks to be a good panel. Do we have time for questions?
Thank you so much, moderator and panelists. Can we please hear it out for the gentleman on the dais? I would like to now invite Mr. Soundarraj, CFO of NXP, to do the honor of felicitating the gentleman on the dais.